What's up, guys? T from Simpler Trading. Give you a quick little recap of the week, and I will go into more detail in the Sunday focus list video I'm going to put on the YouTube channel as far as the setups I have open, the setups I'm watching, things I'm planning on trading. But pretty much a pretty flat week. So did close a little bit of profit on some Nvidia, some NIO or INO rather. Taken some pretty decent losses here this week on some call credit spreads. So tried to hedge myself coming into the week. Obviously, the hedge wasn't needed as the market just bounces back as it tends to do. So taking the losses there on the hedges, couple other sloppy trades. Pretty much, though, a pretty flat week. So this does leave me so far here for the year with $26,000 of closed profits. And then if I take a look at the max potential profit between everything I got open here on the Nvidia credit spreads, some Amazon, some PLTR, some Tesla, etc., all those trades go well. If I can get my 70-80%, we'll be looking at about 65 or 70,000 of closed profits for the year so far. Of course, if those trades work out, and there's no guarantee. So I will go into more detail this weekend, but I think the most important things to take into consideration, if you look at a daily chart here of the Qs with the 21 EMA and then the Keltner channels, these Keltner channels are measuring 2 ATRs away from the 21. And typically, once we find ourselves 2 ATRs away from the 21, we should at least have the discussion that we could be getting a dip down to the 21 sometime soon. So if you just look at the natural rhythm of this recent uptrend, we push off the 21, we reach about 2 or so ATRs to the upside, and then we pull back to the mean, and the trend continues. We get 2 ATRs, back to the 21, and 2 ATRs, and back to the 21, over and over and over again. And I think as we reach this extension, it doesn't mean the market has to pull back, but in the event we do get the reversion back down to the 21, I think as we're approaching 2+ ATRs, we can make a couple little changes that make sitting through that potential dip so much easier. So what I'm a fan of doing at this point is I'll still take the good-looking long positions, but maybe I'll decrease position size a little bit. Maybe I'll give the swings a little bit more time to expiration. In that event that we do pull back, making those little changes and just lowering position size, giving your swings plenty of time, it makes sitting through that dip a heck of a lot easier. If the market just continues to rip, then you're well positioned to take advantage of that. So I think that is the major thing to keep in mind right now. It's a very strong market, but every market pulls back at the 21, and there's just a growing probability we're going to do so once we're a good 2 ATRs to the upside. So take that into consideration as we head into next week. I'm going to be focusing on Amazon, on Tesla, on Nvidia, a couple other names here, some PLTR, but I will cover those in Sunday's video. So a good start to 2021 so far. We got some good open positions, and we'll see how things go from there. But I'll keep you all updated, and I'll talk to you in the Sunday's video. Peace.